Welcome to the Trading Lounge and the last day of summer. Here we're looking at the S&P 500, and you know we've been tracking that ABC correction through here, the A wave, the B wave and the C wave, and that now appears to be completed and pushing higher. So we can look at these markets in terms of up for 1 and back for 2, up for wave 3 here. You can look at this on a smaller chart in a moment, back for 4, and then up for wave 5 here as such. Now once that's completed, once we do have that impulse wave there, that means that we'll have another 5 waves after that. Okay, so the 1, the 2, the 3, the 4 and the 5, then comes the A, the B and the C pulling back, and then we'll see higher. But as it stands at the moment, we only have 3 waves up there. So that could be a corrective wave in terms of an A and a B and a C, retesting supply of sellers through here. So we need to be mindful of that. We can't be sold on one side until we have the evidence, but the bias is to the upside. But just to let you know that we need to confirm that 5-wave structure there. That's the same for the other indices as well. One of the main things that we've sort of noticed is that the other markets are not confirming this move in the indices to the upside, which is a little bit of a concern, and that's why we would really like to see a nice 5-wave structure in this area here. The European markets are the same as well. This is the FTSE here, and as you know, with the FTSE, we were also looking for the A, the B, and the C wave there, and also looking for a break above the support above the 6,300 here. In this case here, if you were trading this market, you just would have used the group 2 here as well, the 72, 62, 72. And you can see that this also appears, I mean, in the futures market here, when it's trading in the off hours, it's a bit difficult to work out the little 5-wave structure as such, but when you look at the cash market, it makes it a little bit easier. So basically up for 1 and back for 2. The 3rd wave will come up, retest supply up through here, so we can expect a wave 4 through here, and then a wave 5 up through here. So that's all going according to plan on the FTSE. The Australian market is pretty much doing the same as well. We have to be a little bit sort of mindful here as well, because we're working with the 5,000 here. If the market breaks higher and finds support on the 5,100, then we can move higher with that as well. Because the Australian market, when it does get into a bull market, it just tends to it can climb quite steadily and quite nicely, but we just have to be mindful that this correction doesn't get out of hand. At this stage, we've got the A wave, the B wave in 3, and the C wave here, but this can also be a larger correction unfolding as well, in terms of an A wave to here, an A and a B and a C wave to here, and then another C wave down through here. So climbing above that 5,100 is important. Also, we should be able to start working out a 5-wave structure up through here and an A, B, C back. So a reaction from this old high and this old high here. So it would be nice to see some type of corrective move back here, then piling in on the long side here. But it does look positive, and when we have a look at the this is the ASX 200, and it's on a weekly chart here. And the reason for pointing this out is that just wanted to show you the price action and the volume to go with it as well. So when you get this type of bar here in a bull trend where it sells off its high here and below its opening and so forth on higher volume, that's the sellers coming in. But what we have seen here is we haven't seen any continuing selling going on through here. We haven't seen increased volume. We haven't seen increased volume this week to the downside here. So this is rather a positive situation here. Well, it's positive in the terms that there's no sellers, so we need to see buyers, however. So, but look, it's half the glass is half full, so to speak, you know. Okay, so one of the other things too that it'll point out here is the thing that could be dragging or holding this market to the 5,000 is the base metals. So let's have a quick look at that. So this is the LME copper market here on a weekly chart. We've been looking at it on a daily chart here, but it's just a little bit tidier on the weekly chart here. And the point here is that this particular correction across here is a correction because we've got the market's moved down through here and we've got a three-wave price action up through here. So it makes this whole move corrective, which, as you know, we've been working it into a triangle pattern in terms of an A and a B and a C and a D and an E, 5 waves in an Elliott triangle, and then a break lower, which should take this low out through here. So, you know, we could see base metals coming much further down, which would, you know, really weigh on the Canadian market and excuse me, in the Australian market, all commodity markets. So that's, you know, that's a dragging factor that hasn't really been, you know, it's not a big deal just yet, you know, because it'll probably come down through here and bounce back off here and come back up and test the 8,000 here and then roll over from this side here. But just pointing out the early warning signals here, because once it does test that and then test this trend line here and starts to break down, then it'll be quite a bearish picture at that point. Also with the metal markets, of course, is China and its market, and normally we look at the Shanghai market. This is the Shenzhen here, and the reason for looking at this, it just makes a little bit more sense in terms of seeing why the Shanghai is correcting back, because this market here is basically facing old highs here at 1,000. So we can kind of expect this to be 5 waves up through here. So we can expect an ABC correction across here, which could take about another sort of 3 to 4 weeks to unfold before we see any upside here. So when we are looking at the Shanghai market here, you can see that this is the Shenzhen, and it hasn't pulled back very far here. It's sticking to this 1,000 here, and it will be for a while. But the Shanghai market, you'll notice here, has pulled back significantly here in relation to that. So we've got this sort of ABC structure here as such that will unfold, and once that's completed, then we'll see some further upside here. So this here will obviously sort of boost a lot of markets around the world when that occurs as well in sort of 3 to 4 weeks time. So that's something to sort of look forward to, but also to understand that this move down through here in 5 waves will give us a 3-wave counter trend here, and then another 5 waves down through to here, and then we move up from that point there. So it's just an influencing factor in the Asian region there to sort of get your head around that. This is copper here on the US market here that we've been tracking, and they just rolled over this morning. So this is why this is not labelled. It rolled over while I was making the video. So yeah, I haven't labelled it just yet. But as you know, we've been looking at this market moving down, you know, through here, and we're moving into a series of lows of wave 3, so wave 4 and wave 5 and wave 4 and wave 5 and probably it's wave 5 here, and another correction here as well. But always, and this one's this is the May contract, so it's roughly around the same price as the one we just left, but these are all corrective bounces here, and once they've completed, they will move to the downside here further. So we can even see a little 5-wave structure in here, so we'll get a 3-wave counter trend back up here, retesting supply, and then moving down further from that. If we have a look at BHP in Australia, why that's rallying, and we understood that we've got this trend line support through here. We also understood that we were looking at this market moving down to the 4th wave of 1 lesser degree, which is doing. It can move straight up from here, or it can just follow that A, B, and C, and then move up from that point there as well. So we just need to allow that. But this move here, we do need to consider it in 3 waves. So if you're trading BHP long, just be mindful that we can get a C wave before we see any further upside as well there. Let's just have a look at BHP in the US. The same here as well here, but we have to label this down here now as the A, the B, and the C here. So we should see further upside, another retest of that there. Let's just have a look at the US dollar as well. Okay, just while we're here, we'll look at this in a moment. Again, the US dollar is peeling off the 82 here. So while this is peeling down through here, and we're seeing this as a corrective move here, because we are looking for a high here, but we're looking for a high around the 82.30 up through here first. Before this rolls over, but any small pullback here would obviously see metals, base metals or commodities move up, such as oil here as well. Oil will also follow stock as well. But this particular correction that this particular pattern we're looking at here in oil, we feel that it's still a corrective pattern. We'll see a new low down through here. It hasn't moved up with oil as much with the S&P 500. It still can do that, but it's just got this overlapping wave structure here, so we feel that there's one more little low to come in here first before we see any upside there. The gold market pretty much doing what we expected it to do in terms of, we're looking at a retest back at 1600 here, but we're also mindful of this ABC here, which can be counted in a couple of different ways. Would be, if it broke through here, would have to look at the 4th wave of 1 lesser degree, and that's coming off quite nicely. So we'll be able to see this continue down further through here, but also look for bounces off the, say, 1590 and a retest back up here. You want to be able to short a retest, a failed retest through there. Silver will be the same as well. So we're looking for having its little ABC correction through here, and looking for, we need some sort of retest either of the 29 here, or in this area, the 72 in this area here would do the trick as well. So looking for a trend down and a retest, failed retest, and then further to the downside. Let's have a look at FX. Okay, and looking at the FX, I just want to start with the US bond market here. So, as you know, we're looking at counting a 5-wave structure to the upside here, and that's panning out in terms of up for wave 1, ABC for wave 2 here, and then the 3rd wave up through here, which will be in 5 waves, the 1, the 2, the 3, the 4 that's unfolding now, and then the 5th wave up through here to make the 3rd, then the 4th and the 5th. So really the US dollar needs to, should be following this to the upside through here. So and the S&P 500 would be sort of doing the opposite to this as well. That's why we need a really clean 5 waves in the S&P 500, so we can get this correlation and confirmation sort of happening within the market. So, but anyway, let's just see. The only mistake that I could be making in here is that this wave 4 is in here, and this wave 5 here is on this new high here with this wave 3 there. That's the possibility. But we'll see the US dollar moving, with this sharp move down through here, which it is through here now. So, as I mentioned, it's peeling off the 82 here. So, there could be further downside to this, but possibly there's maybe there's a top in there already, but we were looking at 82.30 up here for that top there. So let's just chill out a little bit, because this all here appears quite corrective to me at this stage. So we just need a cleaner structure to confirm those moves there. So, but look, while this is peeling off, stock is going to be moving higher. But let's just get confirmation on this one first. The flip side to this, of course, is the euro here, and we were expecting a bounce off the 130, you know, big number, and you know that's what we're looking for yesterday. So this pattern here that we've got here appears to be corrective in terms of an A and a B and a C wave moving up through here. That said, if we're going to get support, obviously support on the 131 is a positive thing, and it has retested that and found that. So the next step is on group 1 here, on the top of group 1. So if support does find itself on the 13130 here, even if you've sort of intraday trading, look for the 33, the 130, 133 is even better. But support on here would see this growing further to the upside. But any breaking lower from here would confirm that this would be an ABC here, and you can take this trend line obviously through here. So we could say that the 130.72 as a retested resistance would see further downside at that stage there. So just be mindful of that as such. If we're right with the count with the S&P 500, and you know that the S&P 500 and the euro move together, then we do have a low in place here. So you would look for that support on the 131.30 to get your first position on there, and then on the midpoint through here as well. But this this does appear to be a corrective pattern at this stage, but let's just see how that sort of settles in. And like I mentioned, we don't have the correlation with all the markets, with the notes and dollar and so forth all lining up, so they're all a bit higgledy-pickledy at the moment. So we just need to be a bit cautious. The Australian dollar is pretty much on track of moving lower through here, as explained this morning in this particular move coming down through here. It's not a really clean move coming down through here, but we can put this in here as low of wave 3 in here, because from this wave 2 here we've got, I mean that's a bit spiky here, but basically down for 1 and back for 2, down for 3 here, back for 4 here, and down for 5 here. So we should see a move back up into, well, normally to this little area through here, but we can see that it's really strong through here. So if this market moves up through the low of wave 1 here, which would be at coming into the group 2 area through here, so a move up into, say, above, well, it's as you know, the 102.72 has been quite pivotal within within this structure. So while the market is here, then under this, then the bias is bearish. If support on this one here, then it's bullish from that stage there. I don't know what's created that little spike here at the moment, but let's just see how that pans out. Alrighty, well, that's it. So in terms of the robo method that we've been using, we haven't been putting many trades out because we know that we've been working through that ABC correction in the indices. That appears to be completed now, so we will switch to the long side and start putting trades out on the long side. So, alrighty, well, good morning and good luck.